All right, here's an interesting article from Silver Doctors posted by Harvey, Oregon. 13.3 tons of gold standing for delivery with only 3.5 tons in Comex inventory. He says, JP Morgan, we have a problem. February 2nd, Comex still have 13.37 tons of gold standing for delivery and only 3.5 tons of dealer gold to serve upon our longs / oil drops again into the $29 column. All bourses around the globe badly down except Shanghai, Hong Kong having a huge housing crisis as demand dries up / Japan cancels a 10-year bond auction due to negative yields on a fixed bond issue, and European banks plunging badly as NERP, or not the near. That was zero interest rates, near zero interest rates, is killing them. In Italy, the car equity company Ferrari halted, as in stocks, shares trading, halted after falling 40%. Now, out of nowhere, why in the hell would Ferrari, or Lamborghini for that matter, fall 40%? And because Ferrari fell 40%, was halted, I'm going to make a crazy suggestion right now that Ferrari or Lamborghini might be next. Remember the whole thing with VW cars, diesels, they're polluting. They were cheating the system. They reprogrammed the computer to cheat when they were doing the emission tests. Oh my God, their stocks plummeted. And then all of a sudden, like Saab and Saudi or something, they plummeted too. Not as bad, but they started falling. Well, what the hell's that got to do with VW? And I think one of them used some technology or a motor or something from VW, but the other one didn't. So it was like right chain reaction. So I'm just going to venture out here and say, company like we got Ferrari falling 40 and being halted, Lamborghini, for no reason, hey buddy, you better look out. You may be next. Not for any fault of your own. It recently went public, I guess, Ferrari, and then U.S. 10-year Treasury bond now at 1.87%. So he says, he always gives this huge summary about what the markets, Comex, gold, silver, stuff like that. I'm trying to get down to some of the interesting Asian affairs late Monday night. Well, first of all, let me focus back on gold for a second. If they've got tons of it standing for delivery and they only got 3.5 tons deliverable, where are they going to get this other gold from? Right, you have registered vault, and then you have the what's the other one called? I can't think of it. One of them is simply accounted for, like investor or someone that owns it, and the other one is deliverable. 2 categories. And the Comex is supposed to only take from this category that's deliverable to give to this outstanding deliveries. This one over here is supposed to be eligible and delivered, and eligible is the other one. So I got a sneaky suspicion they're going to rob Peter to pay Paul. So don't be shocked if you see, they've come up with the gold that they needed to deal with their shortfall, right? Registered and eligible, and you simply see, we needed 10 tons or whatever. All of a sudden, the other one over here that's already accounted for is down by 10 tons, or you find that the GLD is down by 10 tons, and they came up with the difference to give to them. Asian affairs, late Monday night, Tuesday morning, Shanghai up 2.29%. Hang Seng down. The Nikkei down. Chinese yen down. And yet they still desire further devaluation throughout this year. Oil lost, falling to $31.72 per barrel. And for WTI and Brent was $32.90. Stocks in Europe so far are all in the red. Offshore yuan trades at 6.6 yuan to the dollar versus 6.57 for onshore yuan. Huge volatility as the Chinese market scream of credit problems. A leaked document suggests that China will not use the lowering of the RRR reserves, but instead provide direct yuan injections into the market. And then we have Japan initiates NERP last Thursday night, screaming havoc around the globe. The Hong Kong housing bubble suffered a spectacular collapse. Sales plunged over 80%. So I'm assuming that would be like new sales of houses period. Hong Kong housing plunged over 80% as demand dries up completely. I told you in advance, not that I'm genius, I'm sure you probably already knew this. Housing crash 2.0 is coming. Already said it. Already explained. I'm renting a house. Even if I could immediately go and get a mortgage right this second, I already said I wouldn't. I still wouldn't. I'm going to rent. Because I got a sneaky suspicion that the housing market's going to collapse. And when it does, prices are going to collapse with them. Typical. Cause, effect. Cause, effect. Action, reaction. Action, reaction. So, of all places, Hong Kong, that's no little tiny junky city, plunged over 80% in sales for houses. Capital controls from the mainland is surely having an effect on Hong Kong housing. If Hong Kong is having this kind of lack of demand in one of the world's most wealthiest enclaves, one can just imagine what is happening inside the mainland. We have the biggest ever Chinese corporate takeover. ChemChina purchases the Swiss Syngenta for $43 billion US. David Stockman comments on the huge scandal in China with respect to a $7 billion US worth Ponzi scheme, which I gave you yesterday, where 900,000 investors lost their money. Sorry about that. And I gave you my fake interpretation of that. Hope you enjoyed that. He says this one's a biggie. Japan cancels its fixed 10-year bond auctions due to sub-zero rates. The variable rate is still auctionable, and yesterday the yield came in at 0.078%. Now Japan has a problem. Where are they going to find bonds to monetize? No question that they will purchase U.S. bonds in size. European area. This morning, which I think he was referring to yesterday, bank stocks are plunging. Since NERP, they are down 40%. NERP destroys bank profits. Apparently Austria has had enough. They will pay the migrants 500 euros to get the hell out of here, go back home. He says good luck with that. Of course, we got Ferrari down 40%, crashing, halted. And then he says global issues coming to a store near you. You pay the corporate for the privilege of buying their debt. Zero Hedge, Jim Reed, and Deutsche Bank. Oil markets. Oil crashes below the $30 U.S. barrier. Exxon halts stock buybacks. Their oil production surges. The low oil price is disintegrating conditions in African nations. Of course, that was all by design, as I've mentioned a million times. We set the price of oil on the stock market, known as the Comex. Our paper contracts set the price of the real thing. Just like gold, silver, all metals, copper, you name it. Food, corn, wheat, clothing, cotton, and of course energy, oil. We set the price in this country, the club does. Not through the real item, through these paper bets, derivatives contracts. So the biggest USA energy companies have all been downgraded by S&P. Uh-oh. Then after the market closed, oil drops further on the news of big API buildup of inventory. I'm sure. Oh, somebody farted today. Oh, oil prices went up. Up, but the fart didn't stink. Up, oil prices back down. Someone, Exxon executive coughed. Oil prices jumped a little bit. Is he gonna die? Nope. Oil prices back down. No. They just need a story for everyone to say, well, why is the oil collapsing? Because I just looked at some charts yesterday. There's no real difference in consumption of oil. It hasn't really changed. So how is this? The big stock buildups and all that? It's just fake news. It's nonsense. They can flood the market with oil. They can turn them spigots up. They can slow them down. They can do whatever they want. The bottom line is they just need a story to tell you why oil was $90, $100, now it's down to 50, down to 40, down to 30, down to 29. What was that again? Oil drops further on news of a big API buildup of inventory. We set the price of oil through the Comex market. We, as in the club. America sets the price of oil. So all of the world's woes and pain and suffering that they are dealing with due to these extremely low oil prices is our doing in America. Now, I know it's not you and me and the citizens and the good Americans, whatever you want to call us. We don't have anything. Most people don't even have a clue as to what I just said about how we set the price of oil. They're OPEC. OPEC's doing it. Yeah, OPEC's shooting themselves in the foot right now. They like $29 barrel oil. OPEC does. I'm sure. When they need over $70 a barrel just to survive. Right. We set the price, therefore we, the club, in America, using America's tools as their tool. In other words, they're using the market with the rigging of paper prices of all these derivatives contracts to set the price of the real thing. They are the ones causing this problem. So it's not you and me in America, and you're an American, and I hate you. The average citizen across the world may think that, you're an American, we hate Americans here because of what you've done to us. But they don't really understand fundamentally what it is in America that's causing their pain and stuff. It's not just us Americans, but they don't. Average person's not going to see it that way. They're going to, you're American, I don't like you. Because of what America has done to their country in their eyes. But I got news for them and the whole world. It's really not us. It's not us Americans. It's the rich, the filthy rich oil cartels, the banksters. The ones who set up the markets to begin with. And it's always the banker club. They set up the markets, they set up the Comex, all that stuff in the 70s. It was our rigging, it was our setup from day one. But nobody seemed to care back then because oil prices were good for the Middle East. They enjoyed it. But now all of a sudden we've rigged the prices lower and the whole world's suffering. So anyways, it'll be interesting to see where they get this additional gold from to put out these delivery fires, if you will, on the Comex. I feel like I can tell you to be rest assured they're going to get that gold from somewhere. You're not gonna hear all of a sudden they couldn't come up with it, and there's cash settlements all of a sudden. Breaking news, cash settlement, they don't have the gold. We're not there yet. They will find that gold. It'll come from somewhere. They'll either take it from, I think it's the registered instead of the eligible. I think it's the registered that's supposed to be there. And the eligible, I think, was the ones that somebody already is accounted for. They'll take it from there, or they'll take it from GLD. You'll see 10 ton increase all of a sudden out of nowhere to put out these fires, and then all of a sudden over in the GLD there's minus 10 tons, or in eligible there's minus 10 tons. Wherever. They will get it from somewhere. Plain and simple. They could go right to the bullion banks, the ones that are some of them storing people's gold. Lock and key. It's a allocated account. No one can get to it, not even us. And then you go there to get your gold bar, and it's missing, or that's not the serial number I gave you. It's a whole different bar. I thought I only had the key to this. Well, we do have a way to get in and... Come on. They will get the gold somehow. The point of this, though, is that they're running on fumes. So whatever source they have to get it from is now going to be the go-to place. And how much gold is there for them to get and do this with, right? So we are, I think, are inching towards major problems in the precious metals market for the club, which should only serve to drive up the prices as people realize what's going on. First, we had the silver fix rigged, 84 or whatever cents different than what like the Comex price was, the from the CME group. Never ever happened before. As I explained, my theory, some derivatives were about to explode if those prices were where they were, so they had to drop them so the derivatives wouldn't crash. That's my opinion. Why else would they do it? Would be my response to anyone who thinks that my opinion is completely wrong or something. Why else would they do it? And I can't, believe me, I thought of that before I made the comment. Why would they do that? Why else? And I have absolutely no other reason why they would do such a thing. It's the whole world's going to see two completely different, 6% different in the price when they should be the same. Doesn't make any sense, does it? It does if you understand derivatives and how they can destroy and how cause chain reactions, triggering credit default swaps to kick in, which are insurance, to pay for the losses, which then trigger that person to ask for help because their amount of money just taken to insure those people or pay out the insurance, so to speak, the monetary insurance, just broke them, and then you have a chain reaction. That's the only thing that makes sense to me. So, can't wait to see how they deal with these deliveries. Take care.